Hey everybody, I hope you guys can find me on this. I'm such a lame ass god. Fat fingers trying to push the go live and I hit it and it went off and I had to reset it real quick. So hopefully I'll get some of you guys back on this for the chat and for the show today. Sorry guys, old fart, not super smart with technology, but getting better at it. Anyway, Chuck Barone, Tuesday, June the 18th, 2024. I'm sure everybody's still on the other one waiting for me to appear, but here I am. Crazy day, crazy world, crazy host. What can I tell you guys? I apologize. I'm so bad at technology. It's we all have strengths, we all have weaknesses. This, if you know mine, man. Anyway, let's talk about these crazy markets. But before I do, let me take a half a second. Nice to see you on here, Alfred. Glad you found me. Let me take a half a second. Welcome everybody to the show, whoever is on here today. And as always, thank you guys for your support. You guys being here, watching these videos, hitting me up in the comments, means the world to me, guys. I appreciate it. All right, so let's talk about markets today. Rock and roll like crazy, guys. We had more new records. Stock market just flying through the roof. Everybody on this NVIDIA now the most valuable company in the world. Nice, right? Passing Microsoft, Microsoft's been around a long time. They've gobbled up a lot of companies. NVIDIA goes right by them like they're standing still. Market's going crazy. Everybody feeling optimistic, except me, of course. You know me, Charlie Negative over here. So let's talk about these crazy ass markets. So we have the NASDAQ and the S&P 500 both today, new record highs. So the Dow, no record here, up 56 points, 38,834 on the Dow. The NASDAQ up just 5 points, but still a record, 17,862. The S&P up 13 points, 5487, a new record for the S&P 500. Stock market's just rip roaring. I guess it's AI, it's earnings, it's rate cuts. They have a feeling like this is just going to keep going. Today, another company coming out raising their estimate for the S&P, 5,800 for the year. I think it was Citibank. Every company that follows these markets now raising their estimates for where the S&P will be at the end of the year. Everybody feeling real optimistic. Again, except me. The bond market actually rallies up today. Somebody buying bonds today. Rates falling, so the 10-year falls 6 basis points, sitting at 4.22%. The 2-year falls 5 basis points, sitting at 4.71%. So yay, bond market. Not a big rally, but a little rally, right? Yeah, I know. I'm sorry, Ghazi. Can you maybe post a note over there and let them know to jump over to this side? I had a little screw up when I was going live there, pushed the wrong button and completely lost the feed, had to reset it all up. Anyway, if you could just send them a message, tell them we're live here. Maybe we can get them over here. I would appreciate it. Okay, back to the markets. So the bond market rallies, stock market breaking records. The dollar falls, but not much, just down 4 basis points, sitting at 105.26 on the index, kind of been floating there for a couple of days now. Precious metals rally up today. Yay, good job. Gold up $11.40, $2,330.70 for an ounce of gold. Silver rallies up 14 cents, $29.54 for an ounce of silver. It seems like we kind of got gold. And guys, these markets are not like flowing. They're like they're supposed to. They're just disjointed, right? Usually Bitcoin's been following the Dow. The Dow's up today, Bitcoin tanking. You got the dollar and gold rallying at the same time. You got all kind of crazy stuff going on. Nutsoville, but nice to see prices. We need silver to rally up, guys. That's the one I'm watching. We need silver to bump back above $30. Get above 30 and stay there. That's the target for silver right now. Oil rallies up again today, up another $1.21, $81.54 for a barrel of West Texas Intermediate. I gotta say, I'm surprised. It looked like oil was settling back down into its trough. It looked like it was going to head back down to 70 to 75 a barrel, where I really believe it wants to be. At least where the charts are telling me it wants to be. Rallying up again, and I looked for any like real news about why oil would be rallying right now. I'm not really finding much. Maybe summer driving season. Maybe I'm not seeing a real reason for an oil rally. Maybe tensions in the Mideast again. That's always some little bullshit. It never seems to be working with demand, right? Is demand for oil really, really going up? No. Matter of fact, demand's falling because the price is so high. Supply falling? No. So anyway, I'm guessing this might be just a trading spike. I haven't really looked at options and looked at everything why it would be spiking, but I'm guessing it won't last long coming back down to our trough. Bitcoin today gets hammered, $2,079 down, $2,079, 64,380 for Bitcoin. It really had some difficulty at 70,000. Now it's going to go down and test those lows. It looks like it gets support of between 61 and 62,000. So I would not be surprised to see a little bit further decline in Bitcoin. If it breaks below 60,000, look out below. The next support coming at around 50,000. So this could be a pretty big decline for Bitcoin. But the demand is there. The ETFs are there. As we spoke about it yesterday. What does that mean? Wow, very strange in the comments going on. Anyway, is that what that is? Crazy, man. Crazy. Look at this guy. Well, he'll get my volume of chat up, right? But it's cutting everybody else off. What a bullshit, man. I gotta say, you learn something new every day. This is a new one for me, guys. Crazy. Anyway, Bitcoin will, with these ETFs, with more demand, as it gets to be more mainstream, as the dollar loses value and continues to be not shunned, but kind of not used as much by foreign governments, I think Bitcoin going to get a boost out of that. All right, so let's talk about stuff today. Let's talk about stuff. Okay, gold. You saw my comment, or the title actually, gold hitting $27,000. It was a very interesting analysis I read today. It was I guess the guy's name is James Rickards. He's a pretty well-known analyst, been around for a while. Well, what he is predicting, saying gold could be 27,000. The reason for that is he's talking about with the dollar being less used as like the substitute for gold, held in reserve by all these central banks. Central banks now seem to be moving toward gold buying. Actually, I was going to talk about that a little today too. Gold buying. The World Gold Council surveys all the central banks all the time. Almost all of them talking about continuing to increase their gold reserves. The number of bankers saying they will increase their reserves this year is the highest it's been since 2018. We already know they've been buying like crazy. China, Russia, other central banks. Listen to this, guys. 2022 was the record year. 1,082 tons of gold were bought by central banks. Last year, 1,037 tons of gold were bought by central banks. I would not be surprised to see that number being very similar for this year. We know banks were on a tear buying up gold in the beginning of the year, kind of cooling off now as this price is going. So what this analyst, Rickards, was saying is, it looks like they're kind of going to set up something similar to a new gold standard kind of situation where the currencies will be backed by gold instead of fiat currencies. And if that's the case, with all the dollars out there to price the gold reserves the United States allegedly has to the amount of dollars out there, gold would be priced at $27,000 an ounce to support those dollars. That tells you what kind of shit condition the dollar's really in, guys. That is, whoa, that is really funky. Chair. Man, having one of those days today, man, as you can see with the funky computer. Now we got a bot on here. My chair breaks. When you're hot, guys. Anyway, central banks are going to continue to buy gold. That's super bullish news for gold. I really believe as gold prices go higher, that will drive silver higher as well as Joe Sixpack, the Schmuckatellies get into the metals market. A lot of them just, they don't want to buy a tenth of an ounce of gold when they can buy 5, 6, 10 ounces of silver. So I think that you'll see silver start to rally back up again. And it has way more industrial uses than gold does. Gold, every bit of gold that's ever been produced still exists somewhere in the world right now. Not so much for silver, guys. Silver shortages coming. I've been reading a lot of stuff about that, where they talk about, because of the industrial uses for silver, and now the demand as a reserve from consumers, they're talking about silver shortages driving the prices to the freaking moon, guys. So that's awesome news for us. Here's the interesting sales data today. We got retail sales, and they came in. They're looking, if somebody's heartbeat was looking like retail sales, they would be code blue, guys. Sales came in really crappy last month, up 0.1%. Analysts had expected 0.3%. April sales, the month before sales, were revised down, boom, boom, to a negative decline. Actually, retail sales declining now in April. Consumers are just basically exhausted, guys. Prices too high. They're simply closing their wallets to anything but the necessities they got to have. What's interesting, though, is new car sales surprisingly jumped, and that pumped this number up. New car sales were up 0.8%, which is a pretty big jump. That was the thing that spurred this to be a positive number. It would have been negative without that, right? Interesting is restaurants, right? Restaurants, spending at restaurants fell 0.4% last month. It fell the month before that. It's now been down 4 of the past 6 months. I feel it's going to be tough to be a restaurant guy right now, guys. It really is. People sick of the higher prices. Restaurants having to pay more for labor, more for food, more for everything. They got to raise prices. But now they've reached the point where the value is just not there for the consumers. And consumers just saying, no, 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 no. Yeah, electronics were up. You saw that, Donna? So sales, interesting. Sales also fell at supermarkets. So even people spending less at the supermarkets, I'm guessing what they're doing there, pretty simply buying the stuff they need. They're not doing the splurgy stuff. And supermarket sales down. This tells you guys why you're seeing Walmart and Target and other stores now starting to lower their lower prices on a broad variety of things. Now the good news is this kind of another smoothing of the path for the Federal Reserve. And I've been telling you guys that we need to have a recession to get inflation under 2%. I really have been skeptical of this whole soft landing notion. I just still don't buy it. You can see now that the country's heading toward recession. A lot of recession indicators have been saying we're in a recession. You still have the inverted yield curve, which has been inverted. It's going on 2.5 years, which is just unprecedented without a recession following it. I guess it's a record. Craziest times I've ever seen, guys. But now you have all this stuff adding up, right? Slowing job growth, unemployment claims going up. high rates of debt by consumers, credit cards going crazy, right? Slowing spending now, retail sales down, consumers sick of it, exhausted savings accounts. Don't even get me started on real estate, commercial or residential, because guess what? They're both in the frickin' crapper. Commercial, we know what's happening there. I got to say that masterfully covering up this disaster, though. Have you been reading about anything? Have you heard anything in the news? Have you heard anything in CNBC or Bloomberg or Fox or anywhere else about the commercial real estate disaster that's unfolding right before our eyes as we speak? It's freaking nuts, guys. It's nuts. So you got all of these signs pointing to a recession, and all of these things are a result of Fed actions. Real estate, everything that's happened now, the inflation, result of poor management at the Fed, everything that's happened since, all Fed driven. Now we're going to get ourselves a wonderful Fed driven recession. Good job, St. Jerome. Okay, let's talk. You see this article, the Washington Post comes out today. They're projecting in 10 years, the federal deficit, the federal debt, not deficit, the federal debt will reach $50 trillion freaking dollars. $50 trillion by 2034. Guys, I don't know what these knuckleheads are thinking in politics, in Congress, in Senate, and what in the executive branch, any of the branches. None of them are functioning very well right now. And they just have this idea that that this hubris, this bullshit idea that the United States can do whatever it wants to anybody around the world, will never suffer consequences for it. We can borrow and spend as much as we want. There'll never be any consequences for it. I'm telling you guys, we're already spending more now on servicing debt than we are anything else. Now they want to add basically another 50% to the existing debt. We're going to go from 34 to 50 freaking trillion dollars this year. Biden, if he's freaking lucky. Thank you, Attila. You are the man. New chair would be nice. Thanks, bro. If they said this year, if Biden is lucky, we'll get it under 2 trillion deficit this year. And what are their plans for next year? You hear them talking now, we're in the middle of a campaign. You hear them talking, are they talking about, we need to get this debt in order, man. Ooh, baby, we need to figure some stuff out. No. What we're hearing is, well, more tax cuts. Let's get rid of the taxes completely and we'll just make up the difference in tariffs. Let's raise taxes on these people, but not these people, so we can spend more on these people. Guys, none of this, what you're seeing here is a government run amok. You're seeing what's completely unsustainable. You're seeing if there was a clinic on how to do everything wrong, maybe not for your own benefit, but for the people you're supposed to be representing, the people you work for, the people who hired you. They're not representing us at all. Anyway, I'm out. That's it for the day. Tomorrow's going to be a big day. There's all kind of data coming tomorrow. No, there isn't. Wait a minute. Tomorrow's Wednesday, so there will be no show tomorrow. Tomorrow's Juneteenth. I don't know. Maybe I'll put something on. We'll talk about real estate tomorrow. I'm probably going to end up doing a show anyway, even though we won't have a stock market or a bond market to talk about. Everybody's going to be barbecuing it up for Juneteenth, man. Anyway, guys, crazy times. Hunker down, guys. I tell you this now, man. With all of this stuff, it's astounding to me that the stock markets are breaking records. I guess these stock investors aren't seeing the same things I am. Anyway, I explain it to you. Take it for what you think it's worth, guys. But I tell you, be very, very careful. We're in some very, very strange times. Anyway, guys, that's it for the day. Please hit the like button, the thumbs up button. It helps with the algorithms. It gets our video out there to some new people, some more people, gets more views on our videos. I would appreciate that service. Thank you, Attila, for the donation. Always a kind thing. Back on. Well, I'm gonna do a show tomorrow. I made up my mind. I'm gonna do a show tomorrow, same bat time, same bat channel, to make up for my screw up here today. I see Donna and Attila and Wolf and Salty and everybody made it over here. I appreciate that. Sorry for the screw up. The technically unsavvy. I can do stock analysis like in my sleep, but push a button on a computer, a little too tough once in a while. Anyway, guys, have a great day, man. We appreciate the support. Back tomorrow. Till then, take care.